Good morning, SMF MMTs. It's day 3 of the new year, meaning today is 1/5/2011. As far as I'm concerned, as I have said, our participation level in the market is quite different than the public model. And what I am saying is that day 1, we gapped up in the futures and we tromboned. Day 2 yesterday, we had names hit the highs in pre-market and sell right off. This is yesterday's last down move, but you can tell that they were walking this Dow straight up. So once the sellers got out of the way, people came in and they wanted to own equities. That's the way it's going to be on your individual ones as well. And when this is weak and it's going down, you're selling short. Rather it be the Dow Jones, the S&P 500, and the NASDAQ comp and NASDAQ 100, TQQ, SQQQ, bear and bull. And even though that a market is overbought, you don't need to be concerned about that. What you need to be concerned about is when the markets are pulling back, that you're shorting the names when the indexes like the Dow Jones is pulling back, but they came in and they made that high right up here, and then they brought it back down, and then they brought it back up. My point of it is, once they slid the bid, look at here. We broke that top on the way up to this top. We pulled back. We made another high, and the Dow is still strong. So on certain pullbacks in certain leading sectors, the leadership is all that you're allowed to trade. People are stepping in and they want to own at a lower price level within the market. Okay? And that's some of the things that we're going to be primarily focused on in pre-market today. So when we're looking at the Amazon, had an upgrade. Google had an upgrade today. When we're looking at the Apple trade right now, gapping down, we're looking at the lower end and where they're going to come in, just like that Dow. Everything in the brain went ascending, and you should have been ascending along with it. And nothing about the platform. The beautiful thing about the MMT platform is that when they're trading the firm's capital, they don't have all the emotion that the retail buyer does. So basically, there's 5 days that's going to happen. Today is day 3. In the middle of the day will be 2.5 days of price action of the full 5-day trading day. That's the middle. 2.5. We're going to have the open, and then we're going to hit the middle of this 2.5 day New Year trading range. And basically, the bulls want to own stocks. On the pullbacks, they're looking for good bargain hunting, like FCX when they pull back, Goldman Sachs when they pull back. Let's not forget the TQQ is gapping down right now. This is related to the NASDAQ 100. If you take a look at where the close was, the 52-week high now is 157.608. You're printing at 152.68 in pre-market. So therefore, these are the kinds of things when that bull, that TQQQ gaps down, you're going to look at where that price gets made, because once it puts its bottom in, just like the Dow did, you're going to see that move in that TQQQ. So it's very important. As I'm populating your TQQQ bull, which is tied to the NASDAQ comp and NASDAQ 100 specifically, is that if the VXN right down here, that's a fear indicator. If we are breaking higher intraday, then this is going to break down. But once we do put the bottom in, just like yesterday, today's teeny on this is 36 cents a line. But we finally shorted that move down, and when they cleared out, man, I'm telling you, this is what it's about, MMTs. There's no emotion in that. That bull came back alive, and that bull trend came back alive, and the bull trend didn't take where the down move started yesterday. But once the bottom got put in, and the equities like Apple and Google and things that trade in the sector that create this bull move, once they were moving higher, that bull moved higher. So all the shorts got out, all the sellers got out, then people wanted to come back in and own. We will monitor today. We look for the very same thing. Right now, we're gapping down. When we put that bottom into that gap down there, Mr. Bill, and you go through the electronic wiggle jiggle on the opening bell, once that thing is put in at that teeny line and you pop up, you always got to buy them. You always have to. And if they're going to keep ascending with double diamond, 3-minute double diamond alerts, you're breaking higher. And yesterday, we're going to take a look at where this gap down is going to be. Right now, it's going to be right down here is where that bull is going to be. Just remember, you can still go 3 teenies down below the open or a thromboning bar. If you get a thromboning buy action bar, everything in your brain is going to be running. Ratios are going to be ascending and going up. When they put in their highs in the ratio, well, guess what happens? Then you start to get pullbacks. You just want to monitor, MMTs, that the bull and the bear and the indexes and that IR, if you're bouncing from 0 to 35 and then rolling and getting weak, then that means you're only going to get a 369 and you have to sell at the top and get out. Kind of like they were doing yesterday in lots of names. So watching the bull, this is the 3-minute Dow that got made yesterday, and it did. Once that Dow selling was out of the way, you can see how the index is recovered. And remember, it's still the opening bell. Good luck. We're going to look and see and monitor the bear and the bull and the opening bell and price action. And we're looking where the seller clears out and you hit that 3 action buy bar, you're on it and you're off to the races. If you're going up to certain ratios in your MMT platform and they don't go any higher, then you know you have to sell. And you look at going short within the ranges. Let's not get teenied in ranges and sideways movements. Stay out of these movements. These are the movements you're looking for. Wholesale is always here. You don't want to be buying it up here. Your entries are down here, not up here. Forbidden. Let the public chase it up here. You're going to get the wholesale spread so that you can sell it back to the public.